Hello, fellow Rebel Capitals. Hope you're well. So we've got some big news. Retail brands, these mega corporations, are coming out and saying the American consumer is in trouble. And more importantly, a lot of these mega corporations, these big brands, are saying they're going to have to close stores, which means what? Fire people, which could mean the unemployment rate going even higher, which has huge impacts on not only the economy, but asset prices such as real estate. Let's get right into the first story from CNBC. And this is from this morning. Boom, Walgreens stock plunges as drugstore chain slashes profit guidance in challenging consumer environment. Key talking points. Walgreens reported fiscal third quarter earnings that fell short of expectations and slashed its full year adjusted profit outlook due to challenging environment for pharmacies, probably more specifically the American consumer. And this makes sense because it goes back to that chart we always use on this channel. In fact, let me go to that really quick. I didn't have that pulled up, but I think it'll give you a good visual. That is wage increases. I think that's the Atlanta Fed, isn't it, Josh?
For the wage report?
Yeah.
Yeah.
Wage tracker. So this is the one that I use constantly because it really tells a much better story than just the unemployment rate or the mainstream media saying, oh, well, the labor market is tight, or, oh, real incomes have gone up, or real incomes are higher now than they have been in a long time because nominal wages are exceeding the rate of inflation. No. That is nonsense. You've got to open up the hood and look at what's underneath, and it tells a much, much different story. Let me show you what I'm referring to. So we've got this wage growth tracker. Let's break this down by, I want to break it down by age group. Okay, demographics. There we go. So this is the combined. So when you combine the total of these age groups, then you're going to get the total wage increase, which looks like it's higher than the rate of inflation. But that's because this green line is such an outlier. And this green line is 16 to 24. So when you strip out the 16 to 24-year-olds, meaning pretty much everyone that is responsible for kids, putting a roof over their head, for putting food on the table, for car insurance, for paying medical insurance, all these things, their wages have not gone up with the rate of inflation. Even today, their purchasing power is decreasing. And we're seeing that play out right now with these retail brands. That's what the retail brands are saying when they say the consumer is tapped out, the consumer is struggling. What they mean is their wages, other than the young people, haven't gone up with the rate of inflation. So the only other demographic or cohort that you see doing well is the group with assets. But if you don't have assets, and if you're not 16 to 24, you're screwed. That's pretty much what these big mega brands are saying. So we get back to Walgreens. Next key talking point, company topped revenue estimates for quarter on strong performance. Okay, the healthcare segment did well, but everything else revolving the consumer is underperforming. And that's what they state here in the third key talking point. Let's get to the next brand. Levi's shares dropped 15% as jeans maker sales disappoint despite denim craze. And they, just going over one of the key talking points, Levi's chief financial officer warned that consumers have been generally cautious and aren't spending a lot on discretionary items. I wonder why that is. Because their purchasing power has declined since 2019. And now all of the PPP, the stimulus, whatever it is, that's gone. They max out their credit cards. What's left? You have to reduce spending. And if you reduce spending, then that's going to impact the P&L of all these mega corporations, which are going to start to lay people off. Unemployment rate goes up. This is how the cycle plays out over and over and over again. But it's not just Walgreens and Levi's. H&M plunges 13%. And this is all from today. I know Walgreens and Levi's is today. See, we got Walgreens, yes, June 27th. We've got, okay, Levi's was from yesterday. And H&M is from today. So we've got Walgreens, stock plunges. Levi's stock plunges 15%. H&M plunges 13%. Why? On doubts over full year margin target. And again, it's just the same old broken record. The consumer is tapped out. Let's go over to retail sales. This was from about a week ago, where May retail sales increased, but it was much, much, much weaker than expected. And let's go right back to that report that we went over yesterday from my good buddy Brent Johnson. And this was a report that was kind of focused on real estate, but it gives a lot of data points and charts that make a lot of sense when you look at it through the lens of what these retail mega brands are saying about the consumer. As an example, multiple job holders at all-time highs going back to 1995. Multiple full-time jobs. So this is Americans with two full-time jobs is pretty much at an all-time high going back to 1995. And here we see employment data metrics. So this is very interesting, this chart. It's a composition of these 7 metrics that are rather esoteric, but all pertain to the employment market or the labor market in general. And it's depicted by this blue line, which in the past, going back to the late 1960s, whenever this blue line, which is a proxy or this algorithm, for lack of a better word, for the overall health of the employment market, whenever this blue line gets above 3, we are in or headed or very, very close to a recession. And right now we are at a 6. And like I said on the whiteboard video this morning, I am no mathematician, but I can tell you that 6 is higher than 3. And if we're sitting here talking about purchasing power in terms of inflation, consumer prices relative to incomes, but there's one thing that really decreases purchasing power fast, and that's if you lose your job. And if we go into a recession, obviously there's a very, 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 very high probability that the unemployment rate will go up. People will start to lose their jobs, and that will further decrease aggregate demand because purchasing power going down, putting more pressure on these brands to lay off or fire even more employees. This is how the cycles always play out. And the most shocking stat, we talked about credit card delinquencies, that's rising at an alarming rate. But the most shocking stat that I've seen maybe this year is this chart from buy now, pay, or about buy now, pay later around the world, where Australia, 50 to 100% of the people have downloaded or have the ability, have taken proactive measures to be able to utilize buy now, pay later, either now or in the very near future. And the US and China aren't that far behind, where 15 to 50% of the population of US and China in the exact same boat. And I don't know how you can argue that the economy is doing well if people have gone from, yay, stimmy checks, to, oh no, no more stimmy checks. We got to max out the credit card. Then they max out the credit card, and now their last resort is we'll just buy now, pay later, because the credit card companies won't give us any more, won't extend us any more credit. So we're going to have to do that another way, which has astronomical interest rates, just to continue this ruse, really, just to make sure that the music doesn't stop and we're kicking the can further down the road. You guys know just as well as I do, at some point in time, rubber meets the road. You're going to have to pay the fiddler. And if history is a teacher, we know that this doesn't end well. All right, guys, we're going to have to follow the retail sales very, very closely because not only is it a representation of the health of the overall consumer, but especially some of these brands like H&M. Those are the ones I really want to pay attention to closely moving forward because it represents that demographic, which is really the only demographic in the United States which has seen their incomes go up faster than the rate of inflation. So once they start to crack, that could be the straw that breaks the camel's back. We'll have to wait and see. All right, guys, enjoy the rest of your afternoon. As always, make sure that you're standing up for freedom, liberty, free market capitalism. See you in the next video.